Hello and welcome to this WNS Procurement webinar, in which we unpack the 5 megatrends shaping CPG in 2026. My name is Paul Morrison. I'm practice lead for retail and consumer goods at WNS. And for those not familiar with WNS, we are a global services provider. We're focused on managed services, analytics, technology, and solutions. And we have deep specialisms in domains such as supply chain, finance, and procurement. And to guide us through this topic today, I'm delighted to be joined by the one and only Sid Kalia. Sid, do you want to just say hi and tell us a few words about yourself?
Thanks, Paul. Good afternoon, good evening to everybody, and thanks for joining us for this webinar. My name is Siddharth Kalia. I'm today representing WNS Procurement, part of the WNS family. WNS Procurement is an end-to-end procurement solutions provider, providing expertise in digital transformation, advisory, managed services, intelligence and analytics, and digital enablement as well. My role in this organization is managing the business portfolio for consumer goods and retail. And I'll be talking a little bit about what are some of those big trends that we're seeing in the industry.
Super. Thanks a lot, Sid. Well, we'll dive in a second. Just 2 points of housekeeping first. Number one, we have a pretty packed agenda, so we're going to capture any questions flagged on the Q&A, and we will respond to each of those after the session. Also, just to point out that the content today is based on a recent WNS Procurement ebook. We will be sharing that in due course with everyone on this call after the session. So with that, we're just going to first up take a quick look back, as it were, at 2025, and before we dive into our future trends. And I think the year has blown past at great speed, and across the breadth of engagements and conversations that we have at WNS, it's been a frenetic year for our CPG and procurement clients, I think it's fair to say. Just to pick out a few headlines to illustrate that, more than 3,000 new trade and tariff measures introduced in the past 12 months. That's a record high. Food and commodity prices now averaging 25% above their pre-2020 levels, with spikes, for example, in sugar, cocoa, and oils. And freight transportation rates jumped between 25 and 40% on key lanes for ingredients and packaging. So a lot of volatility that is happening. So, Sid, if you can help us sort of set the scene for the year, what are your key headlines for 2025?
No, absolutely, Paul. It's been an interesting year for CPG procurement, where unfortunately a lot of inefficiencies have come forth due to the volatility that we're seeing in the market. So, first and foremost, talking about let's say the significant tariff volatility that 2025 has seen. Trade policies shifted across key consumer markets, creating sudden and unprecedented cost exposure from a sourcing region's perspective. What that meant was that almost overnight, organizations had to change their, let's say, landed cost assumptions. Forward planning became extremely difficult for procurement and supply chain teams. So it's been a very tricky period from that perspective. Commodity instability has also seen levels which we haven't seen in years, and we'll talk about that later as well during our mega trends. Prices for multiple agri commodities, natural ingredients, have surged, driven by climate disruption, geopolitical uncertainty, and supply imbalances. This wasn't just the standard pricing challenge that procurement typically faces. It's affected availability. It's forced companies to rethink formulation strategies, potentially also explore alternatives, and secure their supply for critical inputs. And yeah, to your point, logistical disruptions have intensified in Asia, and that's been the case for a while now. But for some specific countries, there were new regulatory measures that were brought in. There were border delays. Trade dynamics were shifting, which obviously meant an increase in lead time and transportation inflation. The ripple effects of any disruption from a transportation or logistical standpoint means that there's a ripple effect of that on operational risk, and that has reshaped um, a lot of the strategies around the economics of sourcing in these countries and regions. And finally, health-driven regulations have also caused a bit of a stir in the market. Governments have tightened controls around high sugar, high salt, ultra-processed products, um, bringing in new taxes, compliance requirements. So this has potentially driven a structural shift in product strategy where companies are almost being forced to reconsider their formulations and inadvertently also pack sizes and what their portfolio looks like. So yeah, that's what 2025 has seen.
Thank you, Sid. It's been a busy year. I think it's fair to say. So, stepping back from that, how would you summarize the year, or how would you sort of capture that? What's the big takeaway?
I think all of these changes brought together have obviously created an inflection point where we're looking at companies no longer just focusing on. Well, let's put it this way: companies can no longer focus on traditional budgeting or negotiation strategies to manage their volatility. It's almost triggering a reset and pushing transformation agendas forward, accelerating them. Uh, and we're looking at those transformation agendas focused primarily on procurement modernization, bringing in strategic initiatives such as design to value, portfolio simplification, and obviously something that's very close to me, which is basically resiliency building for 2026 and beyond. Um, so yeah, we're going to be talking a lot about this in the coming slides. So
Uh, Absolutely. No, it's a great baseline for starting. So let's dig into our five core trends for 2026, and we'll start where else but with AI and accelerating AI integration. It's obviously an extremely pervasive, high-profile topic. It's in every business conversation, often when it doesn't always belong there, but it's very pervasive. I think it's fair to say procurement has been a mature user of AI machine learning in many areas of the process, like spend analytics for a long time, and then 3 years ago, almost exactly, Gen AI exploded onto the scene, and we are as an industry working through that now. In many ways, there's a lot to unpack, not least questions about scaling and new approaches building on that, such as agentic AI. So, Sid, I'll throw you the ball again. Can you give us your view on what is the reality of AI in this space, and what are we seeing? What is it really scaling?
I'll try my best, Paul. You know, um, I mean, we go to so many conferences, we meet with so many companies, and companies like ourselves, we meet with clients, prospects. Everybody has a different narrative when it comes to AI, right? Everybody is at a very different maturity level when it comes to AI adoption. But I think overall, if you look at it, we've definitely progressed a significant amount from purely piloting AI. There was a bit of a lag over there, but organizations have started seeing some benefits. So we moved away from the piloting phase. There's a strong push, from the management in terms of using AI more and more. And over here, when I talk about AI, I'm talking purely of Gen AI, and we'll come on to the agentic AI bit as well. But overall, AI as a concept, we feel should roughly penetrate about 70% of organizations in the CPG sector by the end of next year. It's rapidly increasing, and we see it attaining maturity in the next, let's say, 4 to 5 years. And of course, there'll be more and more AI technologies also that will come into play. Um, but let's take a step back and look at what is really happening in procurement right now. Because this is not just incremental automation that we're talking about. There's a fundamental redesign of how procurement is creating value, which is driven again by AI. And you and I were discussing about this, but we're looking at it from this evolution that we're talking about. We're looking at it from a three-layer transformation. So cognition, execution, and unification. So, in practical terms, you know, so what that means is, sorry, apologies, lost my chain of thought over there. But let's start first and foremost with the first layer, which is basically the cognition layer, which is generative AI. This is where we're seeing generative AI becoming, let's say, the brain of procurement. We've moved far beyond basic chatbots and static dashboards. Gen AI today understands language, semantics, context, and intent. So it can read contracts, it can compare clauses, explain risk exposures, potentially even suggest mitigation strategies. So in what that means for procurement is, in practical terms, is that Gen AI is interpreting complex contract languages in seconds. It's generating contextualized documentation, especially, for example, from a tendering perspective, basis category strategies. It's creating, summaries for supply performance management from unstructured documents. Um, Before you even get into negotiation, it's already helping you run what is scenario analysis. So what Gen AI is doing is not just giving you data; it's giving you reasoning. It's telling you why something matters and how it connects to your objectives as a category manager. So across most big CPG organizations and also mid-sized CPG organizations, teams that embed Gen AI are already seeing, let's say, up to 80% reduction, between 60 to 80% reduction in analytical workload on all of those repetitive data heavy tasks. And now that is a structural shift because it's freeing up a category manager's time to focus more on, the actual strategy itself and not just on data gathering. So that decision layer is now being taken up by Gen AI. So I mentioned cognition. So now let's move on to execution. So this is where agentic AI comes in, which is still relatively quite new and fairly untested, but is showing good, reasonable results. It's a step change beyond automation and RPA. So, going back to RPA, RPA is rules based, right? So, if this, then what? Sorry, if this, then that. When you talk about agentic AI, that's where agentic AI is interpreting intent and orchestrating workflows end to end. So, triggering stakeholder follow-ups, for example, populating trackers, reconciling missing data, um, updating pricing models, initiating internal approvals, and so on and so forth, right? So there's plenty of tasks and plenty of areas where agentic AI comes in. And the way you should look at it is that Gen AI is answering the questions, the agentic is taking action. So agentic AI is technically emerging as a digital procurement operator. So now that's a very interesting term because over here, what we're seeing is that agentic AI is doing the heavy lifting in downstream operations so that humans, or let's say category managers, can stay more in the upstream strategy bit. And this is where procurement is moving away from being just a collection of tasks to more of a self-driving workflow system. And the last bit that I want to highlight over here is the unification, which is where we're talking about unified spend intelligence platforms. So over here, this is a very critical layer. Procurement has historically always faced issues because of siloed data. So multiple ERP systems, P2P systems, contract files in shared drives, supplier scorecards in Excels, market intelligence in emails, risk data lying somewhere else, pricing models on one laptop, and so on and so forth, right? So that has always been the issue in procurement. Any conversation that you have with any procurement organization will talk first and foremost about the data complexity that they face. So over here, this is where, and the fragmentation makes that insight generation very slow and incomplete. So the unified spend intelligence, let's say, evolution that's coming into play is solving that by creating one AI layer, which is bringing in data from all of those different systems that I spoke about earlier. And it's a continuously updating system. So, with that kind of foundation in place, we're looking at some very strong metrics almost up to 20% uplift in addressable spend. Um, you know, we're seeing significant improvement in leakage detection, real-time visibility of where the opportunities are, and so on and so forth. So, from moving from rare view reporting, we are moving towards continuous sensing of different signals in procurement.
Mhm. Absolutely. Well, that's superb. Thanks for that, Sid. And there's so much in there with the three-tier model, and I guess before even talking about that, the use cases that you go through, it's what's clear is that the deployment of AI in procurement is across multiple sub-processes in different ways, lighting up different parts of that three-tier stack. So there's a very broad and varied sort of rollout of this technology. What does that mean for people in procurement?
Uh, yeah, that's an interesting question, and that everybody's asking that. So I think it's a very exciting time to be in procurement because this transformation is not really replacing people; it's elevating them. The category manager's role is being redefined. So instead of focusing on manually stitching up data, chasing down stakeholders, updating trackers and rerunning your analysis, etc. A category manager is becoming a strategist, a systems thinker, a storyteller. Um, so your AI co-pilots are helping surface insights, pre-score suppliers, forecast cost drivers, generate category plans, translate market signals, etc., into actionable behaviors in real time. So in a way, humans, again, when I say humans, I mean category managers. Humans are moving up the value chain. We're talking of focusing more on negotiation, innovation sourcing, supply relationship management, stakeholder management, supplier development, and so on and so forth. So, in a way, and I'll keep quiet after this, but it is not really replacing category managers. In a way, it's replacing category admin.
That's a good way to summarize it. And unfortunately, we could talk about this all day. We're going to have to wrap on our first mega trend. And I guess stepping back, just by way of conclusion, what we've seen and what we expect to continue is AI adoption continuing to accelerate to the extent that AI in procurement is no longer tool choice. It's about a choice of operating model. It's changing operating models. It's providing that cognition, execution, that visibility control through those three layers. So as a result, we are seeing with our clients a faster, smarter, more resilient procurement as a result. And this is the future of procurement, but it's already happening. So it's really exciting space. But we'll move on to our second mega trend, and this is really all around moving into the real world, if you like, and some of the challenges encountered across the supply chain in the form of sustainability and resilience challenges. As a, I guess it's obvious that CPG companies have been working with investing in these capabilities for many decades. But the regulatory demands continue to change. The supply risks continue to flex and mutate. So the picture is changing. So in this sort of perma-crisis era that we live in, Sid, in 2026. What are we seeing? What do we see coming forwards in terms of resilience and regulation in the year ahead?
Sure. So there are definitely a few forces that are converging. And we mentioned this before. So kicking off with climate volatility and geopolitical shocks that are dramatically, let's say, in a way, reshaping supply security. As per different sources, we're looking at about almost 60% of global F&B supply chains experiencing some sort of disruption which is linked to climate in the last 12 months. That's a big number. This scale of disruption is structurally very different from historical norms. And we're looking at persistent raw material volatility, instability from an acreage perspective, and unpredictable, let's say, shocks to the system.
Yeah, so that is a massive number. So what does that mean then for ingredients and commodities? What's the implications of that?
Yeah, so commodities, agri ingredients, energy, packaging resins, all of them remain in a way exposed to climate and climate issues, geopolitical issues, transportation risks. FAO and World Bank recently did an analysis, and they show that agricultural commodity volatility is now 2 to 3 times higher than pre-COVID levels, or even the 10-year average. So that's a big number, and procurement strategies must potentially assume, that this elevated volatility is the new baseline. Um, yeah, so that's on the volatility bit. The second I would say big disruptor is the regulatory changes. So regulations are accelerating the need for transparency and traceability. The European Union deforestation regulation, as many would know, EUDR, is pushing CPG procurement, towards plot level traceability programs, geospatial monitoring, for commodities such as palm oil, cocoa, coffee, rubber, and soy. Analysts are estimating almost 25% or a quarter of global CPG ingredient supply bases, to be affected by this regulation in 2025 and 2026. So that means procurement teams need risk scoring, satellite mapping, bringing in those certifications for proof, and most importantly, digital evidence. So not just not just supplier declarations. But this also means that sustainability regulation is becoming a material, sort of it's driving a lot of cost for procurement. So we've got the EUDR, which I mentioned. So there's also the CSDR, and together, along with significant ESG mandates for publicly listed organizations and tightening global food standards, compliance is not just a side project anymore for procurement, and compliance costs are potentially expected to go up to even 30% through to 2027.
So that's another big number. What tactics, what options does CPG have to tackle and address this new regulation?
I mean, I'm going to use a term which everybody's been talking about for the last, I don't know, 5 or 6 years now. But more and more organizations are actioning it now. So we're looking at a major shift towards multiple tier transparency. So just focusing on your tier one doesn't work anymore. Companies are in fact going up to tier four, looking at deforestation exposure, risks related to land use, compliance from a human rights perspective, geopolitical vulnerability. So your let's say the digital traceability platforms which help you do this are increasingly penetrating their presence in the CPG let's say ecosystem. There's some analyst reports that suggest that CPG could see almost 80% adoption by 2028, and that sort of helps create that visibility before disruption actually hits as well. So bringing in that proactive layer, I would say, from a transparency perspective. And then the third, I would say, the third major driver from a resiliency standpoint is regionalization of sourcing. So we mentioned this in the slide on the recap on 2025. About all the shocks that the system is seeing from a tariff perspective, geopolitical issues and logistical issues, and so on and so forth. So companies are deliberately moving away from single region dependency or sourcing, or let's say long routes for logistics. In fact, almost 72% of global manufacturing is planning to regionalize at least part of its supply chain by 2026. And the reason is very simple. It reduces your exposure to FX swings. It reduces your exposure to container shortages, freight issues, bottlenecks, and tariff shocks. So yeah.
Yeah, it's a very strong strategy and trend. We see it in CPG. We see it right across manufacturing. for that matter, as well. So there's regionalization, there's the multi-supplier strategy. Is there anything else in the toolbox for CPGs in this environment?
I mean, you could go a level, go a level even deeper, right? And we can talk about localized sourcing. So, um, localized sourcing means you can cut your lead time by up to 50%. You can reduce your risk exposure by close to about 25%. And these are numbers that have come from studies, right? So these are numbers that have been triangulated and assessed. So we're seeing most leading CPGs, all the big names out there, so the likes of Unilever, Nestle, Danone, Coca-Cola, Pepsi, all of these procurement organizations partnering with local suppliers, local farmers, building that let's say domestic ingredient network, simply to create stability and bring in that cost visibility. So
Yeah,
yeah.
that makes a lot of sense. And the numbers that you've been going through there are absolutely significant and material. And if we're talking about resilience, there's only really one conclusion: is that to deal with these effectively is fundamental to the business performance. So resilience is really even more than before becoming a profit lever. And those companies who have the right diversified networks, who do have that dual sourcing consistently rolled out, in the data we have, there's between 3 to 5% stronger margin during commodity spikes than those that don't have that in place. So resilience is moving from uh, um, something that was maybe not actively always front and center. It's not a defensive posture anymore. It's actually a sort of fundamental to competitive advantage. So thank you for that, Sid. Let's move to our third key trend, and talk about Gen Z and the acceleration of next gen product innovation. And I guess I'd start this by saying I don't know about you, Sid, or maybe your audience, but I no longer, well, don't quite fit in the Gen Z category. But regardless of where one fits, the demographic expectations that are in the marketplace are obviously fundamental to our clients and CPGs' success, and not least now for Gen Z as this cohort enters its biggest spending years, if you like. This is shaping demand very dynamically, and it's changing and shaping the need for CPGs to be innovative around new product development and around developing and investing in techniques like personalization, and premium brands, and social commerce. So this is an interesting, it's a fast-moving space. Sid, can you sort of give us a guide what you're seeing as important at this stage?
Yeah, I'll just start off by saying, while I don't fit in that category, I do identify as a Gen Z phone.
Very good.
But unfortunately, I don't fit in that category. Okay, very quickly moving on this. I'm a little cognizant of time as well, and we've got a lot to present. So I'll try and cover this slide as quickly as possible. So let's start with one of the biggest demand shifts. So this slide is focusing more on the demand shifts that CPG is seeing, and of course how that trickles down into procurement as well. Starting first with affordable luxury. The term that we use over here is called mastige, which basically blends together two concepts of mass accessibility and a premium experience. So consumers across income levels, and not just Gen Zs, but of course, obviously also Gen Zs, are now willing to trade up. They don't want ultra luxury as such, but they want their products to feel elevated while still being affordable. And this is something that we're seeing not just in CPG, but we're also seeing in retail. Um, so your premium and masstige SKUs per se are growing faster than your base categories, and many brands are shifting your existing mid-range products into, let's say, elevated, more premium variants in order to manage that demand growth or to capture that demand. This trend is reshaping your innovation pipelines. Brands are reformulating with higher quality ingredients, improving their product performance. In some cases, also elevating their packaging because that's your first view in a lot of cases. But all in all, still protecting, that concept of value pricing. Because remember when I said it is not ultra luxury, it's luxury that's accessible. So for procurement, this creates a double challenge. So we're looking at bringing in premium quality inputs, but also making sure that there is cost discipline when scaling at must. Right. So teams need to become more flexible with their supply networks. They need to bring in higher transparency on ingredient quality, bring in tighter cost control in order to support those mass premium launches. And those who can't adapt to risk potentially then are risking losing relevance in the minds of consumers who are expecting a certain sort of rise in the quality. So affordable luxury has moved from just becoming, let's say, a niche trend to a core growth strategy in CPG. And then from that, we move on to the social media or the social commerce bit, which is fundamentally changing how demand behaves in CPG. You know, we're looking at viral content causing almost 10 times a spike in demand within a matter of hours. And with that, procurement can't rely on traditional forecasting anymore. So we're seeing brands restructure their supplier agreements, build rapid fulfillment networks to keep pace with that, with those spikes in demand. Um, you know, Particularly coming from platforms such as the likes of TikTok, sorry, TikTok. Well, there you go. I was saying I associate with Gen Z, maybe I don't. So TikTok, Instagram, and YouTube, right? So this market, as you can see from the chart over here as well, is expected to reach almost 18 trillion by 2032. And that's a very steep climb. So that brings in the concepts of agile sourcing, small batch manufacturing, and flexible packaging, becoming, let's say, the core competencies. So in short, let's say social commerce is turning procurement from more of a planning function to a real-time response system. And the last bit, which I want to cover over here, is personalization. So again, becoming a core growth lever in CPG, uh, driven more by the Gen Zs, expectations for products that feel more unique and have their values aligned. So, we've done some recent surveys. Almost 50% of Gen Zs want customizable products, and they're willing to pay a premium for them. So we're seeing many brands, such as I'll quote a couple of examples. So Coca-Cola used recently social filters to produce over 1 million personalized cans. Um, there's an AI beauty startup called Cult that is delivering customized skincare recommendations. Procter and Gamble, they launched a modular hair care pod system, which is designed for tailored routines, right? So there's a lot of these examples, and I've just quoted a few of them, where we're seeing a lot of this personalization come in. And for procurement, that means, again, bringing in that flexibility from a supplier standpoint, focusing on smaller batches, faster iterations, and working with more agile specs. And the risk is generally real, right? So in those same surveys, they also highlight that almost 60% of Gen Z will switch brands if the product doesn't match their preference and values. So again, same as Mastige. Personalization isn't a trend anymore; it's a supply chain strategy.
Thanks, Sid. Absolutely, some great examples there, and for the audience, there's more detail on each of those and other case studies in the ebook that we'll be sharing. I guess all of this is placing a massive premium on a CPG's ability to predict and address those trends as quickly as possible, so that it can get on with the business of its core mission, and securing what the enterprise needs to meet demand. And the cycle time, the speed, the urgency of that is getting stronger and stronger with those trends. We'll move this on just as time marches on to our next and fourth megatrend, design to value. And I guess the starting point for this is, we've been talking about AI, we've been talking about regulation, resilience, demographics. These and other trends continue to turn the screw in terms of pressure on cost optimization. It's always been there, but it's ever tightening, and design to value fits into that as a cost optimization way of thinking or techniques about rethinking how to deliver what a customer really wants by engineering improvements into the packaging, product features, the production process to reduce cost as a key outcome. So it's a sort of really interesting and high impact technique. Sid, can you explain how you see this being used in the year ahead?
Yeah, and you said it right, Paul. Design to value has been a concept uh, prevalent for a long, long time. It was brought in by one of the big strategy consulting companies, along with a lot of other, strategic work streams such as zero-based budgeting and product re-engineering and so on and so forth, right? So um, it's been there, but it's becoming more and more prevalent now. So if you start with reformulation as a starting point, that's become one of the fastest ways for a CPG company to protect its margin in all of this volatility. So brands are not just focusing on negotiating harder with their vendors, but they are redesigning products. Get to quote a few examples over here. Excuse me. So you know, Mars Wrigley had cut its pack sizes on some confectionery lines. Mondelez invested in lab-grown cocoa. Unilever reduced its palm oil content by almost 25% in a few select SKUs. So this is all publicly available information, right? So we just pulled it all together. But these moves are swapping out those the high-cost inputs for stable alternatives while still keeping that consumer appeal, and that's the core objective of design to value. So, cocoa, for example, saw triple digits year on year inflation. Packaging costs have significantly risen across almost all CPG companies, and this engineering-led approach then basically is becoming more and more standard in CPG procurement, and will only sort of penetrate even more for those who've not adopted it yet in the coming year. Um, Organizations that adopt these kind of you know sort of strategies are then obviously also seeing faster cost relief in cases of spikes and volatility. Um, Another, I would say, key structural cost lever is SKU rationalization. So rather than just cutting costs, companies are also focusing on, and this is an interesting term here, designing out complexity. So what that means is you eliminate, your slow-moving SKUs and concentrate all your resources on the more high margin pillars per se, from an SKU standpoint. So again, plenty of examples here. Nestle with its vegan Kit Kat product line, Danone delisting almost about 20% of its dairy SKUs in Europe to prioritize faster selling products. Starbucks cutting roughly 30% of its menu items to simplify operations and improve speed and service, etc. So this impact isn't subtle when you're letting go of these SKUs. But if you look at it, this simplification of SKUs can potentially drive up to 5% in sales, and can see significant boost in margins. Um, so yeah, so that's on the rationalization bit. So this portfolio pruning, if I may call it, um, is now a strategic capability. So procurement teams that don't act on this again risk, higher conversion costs, slower service levels, and potentially missed growth opportunities in this volatility. So that's those are the two levers, which is rationalization and reformulation. Um, and then the last bit on this is a mandate. It's almost becoming a mandate, which is clean label. So we mentioned this before. Consumers are expecting, better products, premium products, but they're also looking to recognize and trust the ingredients that are going into their products. So, for example, in the US, there are regulations that are already phasing out synthetic dyes by the end of 2026, pushing brands to reformulate at quite the speed. So major shifts
Mm.
across organizations, the likes of, for example, Nestle, wanting to remove all artificial colors across its US portfolio. Pepsi removing artificial dyes and flavors from its key snack brands like Lay's. So this market is scaling fast. I'm talking about the clean label market. So the demand for this is I've got the number over here, but demand is projected to grow almost 7% on an annual basis, reaching close to 85 billion by 2032. So procurement has to get into this. Securing compliant suppliers, building transparency into ingredient sourcing, and hedging risk early, because brands that delay reformulation risk regulatory exposure, consumer backlash, which will inadvertently lead to significant margin erosion.
Absolutely. Loads in there, and I guess just to wrap, the thing that strikes me about this whole topic is that it's maybe one of the areas that is where innovation is most visible for the customers of CPG. If I think about in my household in the holiday season, the packaging and formulation of celebration chocolates, for example, these are frontline outcomes. But seriously, it's very visible, very innovative, and linking very closely to the first megatrend we're talking about in terms of AI. We see AI being used very actively as an agent of change, of thinking through reformulation in a totally different and disruptive way. So it's a really exciting and important space. With that, we'll move to our fifth and our final mega trend around business model transformation. So we've covered AI, resilience, regulation, demand, cost, and been diving into reformulation amongst other topics just there. Business model transformation is obviously a big bucket. There's a couple of key dimensions in that jump out as sort of active and important. One is around the business portfolio, and secondly, around procurement operations. For example, the rise of the procurement GCC, or Global Capability Center. So first up, maybe Sid, you could tell us about portfolio management and then into the global ops picture, please.
Sure. Another interesting sort of phrase here, shrink to grow. So that's the strategy that's coming across in CPG. We've spoken so much through this conversation about margin pressure for the last couple of years. It's been intense. So companies are obviously not just looking at simplifying their SKUs, but also simplifying their, let's say, business units. Divesting low margin legacy, non-core categories, so that they can focus, they can increase their focus, and relocate their capital. So again, a few examples over here. Kraft Heinz splitting into two units, to separate its legacy cash flow brands from high growth premium categories. Nestle spinning off its waters business to double down, on the higher potential health and nutrition segments. Reckitt divesting its essential home portfolio and reorganizing around fewer high margin power brands. So the objective is straightforward: free up capital, cut operational drag, and concentrate resources on areas with stronger growth and consumer relevance. So the signal is clear. Companies that are delaying portfolio pruning, and we spoke about SKU pruning before this as well, are risking spreading investment across those slow moving categories and missing emerging market opportunities. So I would say that's one of the big shifts that are happening. And the other shift, as you were talking about, Paul, GCC or GBS, so global capability centers, global business services, shared business services, whatever term an organization used, but essentially a concept that was focused on offshoring a lot of the tactical tasks in procurement to low-cost countries in order to capitalize on labor arbitrage, drive efficiencies. A lot of these GCCs, especially for example, in India, are moving away from just becoming that cost-saving back office to strategic innovation engines. So, as you can see from the graph over here as well, India accounts for about half of the retail and CPG GCCs. Deep talent pools, strong digital capability, enough government support that is sort of helping drive that growth. There are, of course, other emerging hubs as well. For example, the Philippines, Mexico, Poland. But what's changing is the mandate. GCC is now driving the AI agenda, focusing on AI adoption, digital procurement, bringing in that analytics capability in there, automation, and helping the business make faster decisions. So the companies that are leaning in to gaining this control, who are sort of are leaning into sort of this whole program, are then looking at not just lowering their operating costs, but bringing in better agility, better resilience against the disruptions that we've been talking about for the last 45 minutes. And those that delay are obviously then delaying innovation. So to summarize it, I would say GCCs are becoming, let's say, the control towers of digital procurement and potentially even enterprise transformation in CPG.
Yes, great points there. Absolutely strategic and provide insight and direction. And then there's a whole series of very tangible benefits that we see when procurement is enabled through GCCs, often, as you say, Sid, there as part of a wider GBS strategy. So we're talking about real and proven outcomes. So things like a 30 to 50% reduction in operating costs through higher efficiency and access to global talent, 40 to 60% faster cycle times for sourcing and contracting, a 10 to 15% saving on spend when analytics is more consistently applied in stages like negotiations and strategic sourcing, and then up to 80% savings on transactional tasks when automation and centralization really squeeze out some of the non-value add manual processing. And then there's additional control benefits. So delivering more than 95% spend visibility and 15 to 20% reduction on the complexity of supplier base. So these are the very tangible benefits of operating these global capability centers. So it's not just strategic, it's not just more cost efficient, but it's also more controlled and smarter. So many drivers of this particular part of our fifth megatrend here. So that's the end of our 5 trends. We've got through that just about in time, Sid, and that leaves us to the final quick set of insights and perspectives on the big picture, if you like. As we look ahead, what are the sort of key takeaway messages that you want to leave our audience with? We've been through a whole series of trends, opportunities, innovations. How would you summarize that?
Well, I think the concept of real-time speed is now almost becoming a requirement. It's not just about being an advantage. And companies that are making those procurement decisions in hours rather than waiting for weeks will potentially win the margin race, let's say. Um, you know, Supply chains are being restructured by external forces like regulations, sustainability mandates, and I think the smarter teams aren't treating this as a compliance, but rather an opportunity to redesign their sourcing in a more profitable and resilient way. Um, Demand is outspacing procurement planning, and we've seen that from some of the content that we presented earlier as well. There are so many viral moments, social commerce, influencer-driven, let's say, surges, which are now defining your typical product cycles, and not just the traditional ways of looking at, the peaks and troughs in consumer demand through traditional channels. So procurement has to be able to pivot instantly. Um, and the last bit that I would like to leave this with is the cross-functional innovation is the new competitive edge for procurement. So cost negotiations, yes, it's always core procurement, but it's also now about engineering margin into your product itself, so that it's sort of through design, through formulation, reformulation, through packaging, and through operating model transformation, rather than fighting for it, let's say. So yeah, those I would say are the four key themes to think about for the next year.
Yeah, there's a lot to think about. But that's great. Thank you for sort of weaving those trends together for us at the end. And I guess the WNS view of these four themes here at the end is that those CPG organizations that can move on all four of these simultaneously, because they are, in our view, live, active, valid, and accelerating real imperatives, those companies that can do that will protect their margin and build resilience better than those that don't. And if you're just picking off maybe one or two of these, then that organization is likely to fall behind. So it's a real call to action from the team. And I think unfortunately, time is against us. We have to, at this point, draw our session to a close. And I just want to say thanks, Sid, for taking us through that sprint and giving us the benefit of your insights. So I'm going to need to lie down now. But thank you very much for steering us through. Thank you to our audience for joining us today. We really appreciate your company. As noted, any questions that have been flagged, we will be answering them offline and coming back to you. And we'll be sharing the playbook on megatrends we referenced earlier with everyone on the call in due course. In the meantime, do check out wns.com, and we really look forward to continuing the conversation with you. So thank you and goodbye.
Thank you.